Many people think getting rich is complicated. You need a financial advisor, you need to study the market, or you need a high-paying job. But J.L. Collins says wealth is simple. In fact, so simple that almost anyone can follow it. Welcome to The Simple Path to Wealth, a guide that shows how to build financial freedom with very few steps. Today, we'll break the book chapter by chapter in the simplest way possible. Chapter 1. The Simple Path. The author explains that money gives you two things, freedom and flexibility. The goal is not to become super rich, it's to become free. The core idea? Spend less than you earn, invest the surplus, avoid debt, and do it consistently. This simple path beats most complex strategies. Chapter 2. Why you need FU money. This chapter introduces the legendary idea of FU money, the amount of money that lets you walk away from any job or situation you don't like. You don't need to be a millionaire, you just need enough savings to make independent choices. Chapter 3. Debt, the ultimate enemy. Collins calls debt a financial trap. Good rule from the book? Pay off all high-interest debt ASAP. Don't buy things to impress others. Your future wealth depends on your ability to stay debt-free. Debt kills your optionality, and optionality is everything. Chapter 4. The Power of the Market. The author explains the stock market simply. He says the market always grows long-term, even though it goes up and down in the short term. The trick is to stay invested, ignore the daily news, never try to time the market. Chapter 5. The only investment you need, index funds. This is the heart of the book. J.L. Collins recommends one main investment, the VTSAX Index Fund. In India, Nifty 50 Sensex Index Funds. Why? Low fees, automatically diversified, beats most professional investors, stress-free. This is how wealth silently grows in the background. Chapter 6. Why fees matter more than you think. A small 1% fee looks harmless, but over 30 years, it can steal half your wealth. That's why he repeats again and again, keep costs low, always. Chapter 7. Do not try to beat the market. Collins says, active trading, stock picking, timing the market, these are losing games. Index funds win because they represent the entire market, and the entire market always grows over time. Chapter 8. The 100% Rule of Simplicity. The author's portfolio recommendation: for young investors, 100% in broad index fund like VTSAX. For older investors, add bonds for stability. Simple, clear, reliable. Chapter 9. The wealth-building machine, compounding. Compounding is the magic that makes money grow exponentially. Even small monthly investments turn into huge wealth over 10 to 20 years. Time is your biggest asset. Chapter 10. How much do you need? The 4% Rule. The book introduces the 4% rule to calculate financial freedom. If your yearly expenses are 5 lakh rupees, you need 5 lakh divided by 0.04 equals 1.25 crore. After that, you can withdraw 4% each year, and your money will last decades. Chapter 11. Stock Market Crashes, What to Do. The author gives a very important lesson. Do nothing. Don't sell during crashes. When the market crashes, keep investing. Don't panic. Don't stop your SIP. Crashes are discount season. Chapter 12. How to Stay the Course. The biggest financial enemy is not the market, it's your emotions. Wealth belongs to those who stay patient, believe in the long term, ignore fear and greed. Consistency beats intelligence. Chapter 13. Your Money, Your Freedom. By following the simple path, avoid debt, save consistently, invest in low-cost index funds, stay calm during downturns, You will slowly build wealth and ultimately buy your freedom. The final message of the book: the simple path works. Not overnight, but definitely. If you follow this book's advice, you don't need complicated strategies, just simple steps repeated over time.